Ather Energy is finally launching its long-awaited initial public offering worth 2,981 crore rupees. The IPO opens for subscription on April 28th, that's this coming Monday, but before we dive into who's cashing out big here, let's cover the key details. The company has set a price band between 304 and 321 rupees per share, giving it a top-end valuation of nearly 11,956 crore rupees. The IPO includes a fresh issue portion worth 2,626 crore rupees and a smaller offer for sale segment valued at around 355 crore rupees at the top end. Welcome to our weekly Indian startup news show here at Backstage with Millionaires. I'm Caleb Friesen, your host, and today let's break down who's making the most money from this IPO and highlight one quiet investor that backed Ather before anybody else believed in it. The founders of the company, Tarun, Mehta, and Swapnil, Jain, each own a 6.81% stake in the company, valued at around 659 crore rupees at the upper end of the price band. And even after offloading a small portion, just 9.8 lakh shares each, they're set to pocket over 31 crore rupees apiece. That's a return of more than 15x on their original investment. But now let's talk about Tiger Global, one of Ather's earliest backers. Tiger invested in the company back in 2015, and they're now poised to make over 8 times their investment from this IPO. But here's the surprise. Not the founders, and not even Tiger Global, are making the highest return on their investment. That honor actually goes to an academic institution, IIT Madras. Through its Incubation Cell, IIT Madras supported Ather back when it was just an engineering project, and in exchange for providing campus infrastructure and resources, the institute received a 5% equity stake, and that stake has since diluted to just 0.5%, but it's now valued at around 50 crore rupees. Now, it's difficult to put a return value on this because IIT Madras never invested any money into the company. They just offered their support when no one else was offering it, but it's safe to say that IIT Madras is the biggest winner in this IPO. But this isn't just a funding story. It's a case study in why India needs more deep tech incubation. Unlike software startups, hardware ventures need patient capital, access to labs, and high-end R&D support. And IIT Madras provided all of this: mentorship, testing grounds, and prototyping facilities. And they did it at a time when even institutional investors were not willing to fund Ather. Today, IIT Madras has incubated over 400 startups on campus, and most of them are in deep tech like Ather, and the E-Plane company is another example. So if India wants to become a global hub for manufacturing and industrial innovation, institutions like IIT Madras need to keep scaling up these efforts. Ather's IPO is more than just a financial milestone. It's proof that academic incubation can lead to market-ready products and even build billion-dollar companies. All right, now continuing to talk about deep tech here, Bhavish Aggarwal's Ola Group now holds more than half of all the patents granted to India's unicorns. And according to recent data from the Indian Patent Advanced Search System, India's 117 unicorns collectively hold just 229 patents. And more than 50% of those, around 180, belong to the Ola Group. It includes patents filed by Ola Electric, Ola Consumer, and Crore AI. In fact, Ola's electric vehicle arm alone accounts for nearly 70 to 80% of the group's total filings. And they're not just filing these patents in India. Ola's IP portfolio extends to the United States, the UK, Japan, China, and Australia. That being said though, Bhavish says that he isn't happy that Ola Group only filed 650 patents. He wants more, and they're hoping to accelerate their innovative growth in the coming years. All right, next up in the news, Zomato is once again in the spotlight, this time for their latest leadership change and a major regulatory win that could shape the future of India's food delivery market. So let's start with the leadership change. In a recent announcement, Zomato said that Rakesh Ranjan will step down as CEO of the core food delivery business. Rakesh, who took on the role in June of 2023, will remain with the company but transition away from his current responsibilities. And so stepping in to directly oversee the food delivery unit now is Dipendra Goyal. And this move is being positioned as part of Zomato's regular leadership realignment, something the company says it does every couple of years, but it comes at a time when India's food delivery sector is going through a bit of a rough patch. In fact, in Zomato's letter to shareholders this January, Rakesh himself acknowledged a demand slowdown that began in late November of last year, 2024. And then earlier this month, another top executive, COO Rinshul Chandra, also stepped down, adding to the management churn. However, even as Zomato navigates internal changes and market turbulence, it just scored a major win on the legal front. The Competition Commission of India has ruled that the platform's service fees, delivery charges, and pricing practices don't amount to unfair or discriminatory conduct. This ruling is a result of a complaint filed by Lalit Wadhar, who had accused Zomato of abusing its dominant market position by imposing platform fees and listing food items at prices 20 to 30% higher than their offline counterparts. Lalit also raised concerns about a lack of transparency and accountability in how Zomato handles consumer complaints and additional charges like donations, tips, and packaging fees. But after reviewing the case, the CCI concluded that there was no prima facie evidence of anti-competitive behavior. The CCI also noted that users can opt out of voluntary charges like tips and donations, and that the absence of printed pricing on food packaging doesn't present any competitive issues. It also dismissed the claim that higher platform fees must be tied to invisible improvements in service. And this is a major win for Zomato, which is often accused of discriminatory and unfair practices. All right, next up in the news, South Korean gaming giant KRAFTON is doubling down on India's gaming ecosystem. The company has just picked 6 game studios for the second cohort of its India-based incubation program from a pool of over 350 applicants. We have Cleanup Games from Madurai, Singular Scheme from Mumbai, Unwind Games from Hyderabad, Advaita Interactive from Kolkata, Ginger Games from Delhi, and Smashhead Studio from Bengaluru. And there were 2 studios that kind of stood out to me here, Singular Studio and Cleanup Games. So Singular Studio is developing Frontier Paladin, and I'm going to talk slowly so that we can spend as much time watching what this game actually looks like, but it's an action-based RPG that blends combat along with tower defense, and I love tower defense games, and also base building elements. And then Cleanup Games is working on this game called Chromati. They're calling it the Dark Souls of Candy Crush, and it really looks quite stylish. I love the aesthetic here. Kind of feels like Dance Dance Revolution in a way, or maybe something like Guitar Hero, which I remember playing as a kid, and I'd love to jump into this one as well. And so now each of these studios is going to be joining the KRAFTON India Gaming Incubator, or KIGI, where they'll receive mentorship, business guidance, and grants of up to $150,000 US. But anyways, moving on to the next news item here, it seems like Unacademy might be turning a major corner. The company that was once known for its sky-high cash burn and aggressive acquisitions is now in what CEO Gaurav Munjal calls a default alive state, holding 1,200 crore rupees in the bank and sharply cutting losses. Gaurav shared highlights from their recent town hall, and they look pretty promising. He said that Unacademy's core business will burn less than 200 crore rupees in 2025, down from 1,000 crore just 3 years ago, and Gaurav even made it clear that the days of acquisition-led growth are over. He said any edtech that goes after multiple acquisitions to grow is bound to fail. Instead, Unacademy is doubling down on its internal product development. Graphy and PrepLadder are now generating cash monthly, while AirLearn, its fastest growing product, has reached 70,000 daily active users and a $2 million ARR. Offline coaching remains part of the mix too. Nearly 70% of Unacademy's physical centers are expected to be profitable this year, delivering strong results in G, NEET, and UPSC Prep. All right, next up in the news, just something I wanted to put in front of you all. LocalHostHQ has just announced a Skypass, a perk that gives free flights across India to any student accepted into their fellowship program. That's right, free flights anytime, anywhere in the country. And I think that's pretty cool because as a founder, you need to travel quite a bit, whether it's pitching to investors, attending events, or joining demo days or hackathons. Being able to show up matters. But this offer is only for students selected into their fellowship program. So if you're a student founder aged between 16 and 22, you can go to their website and submit your application starting from the 1st of May. And the best part is you'll get a yes or no response from them within 24 hours. And I know that this section of the video probably sounds like a sponsored ad read. It's not. It's just something I found on X, and I wanted to let you all know about it because I know a lot of people watching these videos are in that age group, 16 to 22, students, probably don't have a lot of money to spare for stuff like flights, especially flying all around the country to do the kinds of meetings and have the conversations and participate in stuff that they would want to, that would definitely benefit their entrepreneurial career, but they just can't afford to, right? And it's hard to justify given the high cost of flight tickets. So this is something that I think you all should definitely take a look at seriously. And if you're in a position to apply for this, then go ahead and do it. All right, now let's move into the funding news segment for today's video. This week, Indian startups raised $78 million, almost the same as last week. This is below the trend line, but let's take a look at some of the companies that raised funds this week. The first one I want to talk about is Mumbai-based consulting firm Uniquest Consultech, which helps businesses with their ESG and financial reporting, and they've raised $20 million in their Series C round. Following that, we have Bengaluru-based Fabric IoT, which builds smart IoT-enabled tracking devices that help companies keep track of their goods as they move through their warehouses, trucks, and delivery hubs in real time, and they've raised $13.5 million in their Series A round. After that, we have Delhi-based Vayud, which designs and manufactures autonomous unmanned aerial vehicles equipped with cutting-edge technology. So this is Ather, their flagship nano drone. It weighs just 250 grams, but has a 2-kilometer range. It's a drone designed specifically for the Indian Defense Forces to quickly detect threats without being detected, and they raised $10 million. Next, we have Delhi-based biotech startup Greengrahi. They use black soldier flies to convert food and agricultural waste into high-quality insect-based products for animal feed and plant nutrition. And they've already created products like N-Gold, insect-based protein supplements for animal nutrition, and Shakti, a biofertilizer that improves soil fertility, and Envardhak, a biostimulant that enhances your crop yield and resilience, and they raised $3.73 million. And then finally, we have Ivory, a health tech startup from Mumbai, and they want to help you detect early signs of cognitive decline and provide personalized strategies to mitigate risks associated with conditions like dementia. And they're doing this through neuroscience-backed assessments, interactive brain games, and expert consultations, and they raised $1 million. All right, that is all the startup news that I have for you all this week. I'm Caleb Friesen, and this has been Backstage with Millionaires. Thanks so much for watching, and I'll catch you in the next one.